Next, we would like to invite Dr. Aazim, Superintendent and Registrar of the Public Debt Department of the Central Bank of Sri Lanka, to speak to us about the opportunities in Sri Lanka's local debt market.
Hello everyone. Greetings from Colombo, and the topic that you are listening and discussing with me today is not only timely, but also gain greater significance in terms of recent challenges, particularly in frontier and developing economies faced in terms of sourcing their required resources for budgetary as well as development purposes. And the local debt market, in the case of Sri Lanka, you probably see mainly comprised of government debt, government securities, and corporate bonds. And in the case of any infrastructure or mortgage-based issuances, we do not necessarily see particularly targeting those asset classes, but what we are seeing is some bank bonds are mostly for housing finance purposes. And the focus of my presentation, my discussion with you today is mainly on government securities, and also I would have a general reference to corporate bond market in the country. And if you look at the debt securities market, government debt securities market in the country, we have a well-established, a century-old government debt securities market. The commencement of issuances of government securities in the case of Sri Lanka has a history dates back to 1923, where the colonial administrators in London, they have issued through crown agents in 1923. But the domestic issuances of treasury bills started in the country in 1941. And more focused debt instrument in terms of treasury bonds was started in 1997. And these were evolved in terms of institutional, infrastructure, and also the currency format in which these instruments been issued over the years. And you probably see the dedicated primary dealer system in Sri Lanka has started in early 2000s. And then, of course, we also move into issuances of foreign currency denominated treasury bond. We call it Sri Lanka Development Bonds in 2001. And then these instruments have evolved in terms of paperless, scriptless instruments by 2004. And having said this, the market was not only restricted to domestic investors, but expanded to foreign investors starting from 2006, where the treasury bond market was open for foreign investments. And then, of course, Sri Lanka not only relied on sourcing its financing resources from domestic market, but also move into seeing international capital market by issuances of international sovereign bonds. That started in 2007, and since then, Sri Lanka been a very active participant in international capital market, except maybe in 2020 and 21 due to various reasons. We will touch upon those as we move on. And also we have lengthened our issuances into more longer tenure, 30-year bond issuances, and also we have opened up our issuance plans to the investors by publishing an auction calendar in the central bank website. And even today, if you go to the central bank website, you probably see for the entire financial year 2021, all the treasury bond issuances that have lined up with treasury bond issuances is there for investors to have the information. And then, of course, these issuances arrangements evolve with more infrastructure, and also from a perspective of seeing Active Liability Management Act being introduced in 2018. And also we have come to a more focused approach in debt strategy by introducing a medium-term debt management strategy in 2019, and now with more focused capital market development projects. I will elaborate into some of these stuff during my discussion with you all in a little while. And if you see the instruments that we are offering to the market, what we are basically seeing is both domestic currency, Sri Lanka rupee denominated, as well as foreign currency. As of now, it is US dollar denominated government securities. And if you look at the most sought after debt instruments in the government securities market, treasury bills and treasury bonds. These are paperless, scriptless instruments, electronically recorded and issued. And these are issued on a periodic basis. And in the case of treasury bills, it's weekly. And the instruments maturity per se, these are issued for benchmark maturities of 91, 182, and 364-day maturities for treasury bills. But in the case of treasury bonds, you see 3, 5, 8, and 10-year maturities at benchmark issuances. This does not mean that we are not offering longer tenure issuances. We have up to 30 years. This comes based on market conditions, market circumstances, financing requirements. And these are also available for both domestic and foreign investment per se. And the instruments that we are talking here, both bills and bonds, are highly liquid and has a well-established secondary market for market participants to access. And when we talk about another instrument which is offered in US dollar terms at the moment, that is Sri Lanka development bonds. This is nothing but treasury bonds issued in US dollars. And the maturities and the benchmark issuances for Sri Lanka development bonds mainly concentrated across 6 months to 5-year maturity horizon. And this being offered mainly to domestic foreign currency earners and foreign investors who are interested in investing in the country. And the liquidity is, in comparison to bills and bonds, moderate, but could be easily tradable through primary dealers and licensed commercial banks. But we call them a marketing arrangement in the case of SLDBs as designated agents. And we offer also in terms of both fixed and floating rate arrangement for these instruments, and coupons are paid on a semi-annual basis. And then you see international sovereign bonds. I just brought this into the equation to describe the arrangements and facilities that the investors could have in terms of investing in Sri Lanka. This is not in the domestic market, but in the international capital market, where the benchmark issuances ranging from 5 to 10 years, but also we have gone into issue a longer 10-year issuances in 2019. And generally, this is issued on a par price at the face value itself. And then, of course, trading through lead arrangers or joint lead arrangers in the case of the ISPs. And in 2020 and 21, we have not accessed international capital market by issuances of international sovereign bonds due to reasons that most of you all are aware, particularly in terms of volatilities experienced by frontier and developing economies. In the case of Sri Lanka too, we have experienced substantive volatilities in terms of the secondary market prices of ISPs, and I'll get into that with little more details as we move on. The investment opportunities in the local debt market. And you know, the most sought after local debt market government securities, treasury bills and treasury bonds. These are denominated in Sri Lanka rupees. This can be subscribed by investors through the primary market and through the institutional arrangement called primary dealers for government securities. And in the secondary market, the investors can access the secondary market through both primary dealers as well as licensed commercial banks. And the primary dealer system is mainly comprised of licensed commercial banks, so we do not necessarily see much of a difference in terms of primary dealers or licensed commercial bank in terms of accessing both primary and secondary market of treasury bills, treasury bond issuances by investors. But interestingly, the government of Sri Lanka has also facilitated direct issuances of government debt securities, particularly for foreign investors, targeting significant volumes of investments. We can call it like US $50 million or more in terms of investments in the primary issuances. They can come directly to the central bank and purchase through a primary dealer in terms of the maturities offered. And also we have extended the facility where the government has also facilitated through central bank an arrangement of US dollar LKR buy-sell currency swap arrangement, and through which they can also take care of the volatilities in the exchange rate. And this swap facility was extended for a period of 1 year and up to 2-year arrangements. But if a requirement arises, this could be revisited on the basis of investors' preferences. Right. So with respect to investments in Sri Lankan development bonds, which is denominated in US dollar, and the subscription by investors in the primary issuances through the institutional arrangements called designated agents. These designated agents are nothing but the primary dealers and licensed commercial bank who have opted to be marketing agents for Sri Lanka development bonds. And the subscription, apart from the primary issuances, is facilitated through a direct issuance window. The direct issuance window is announced to the market with the outcome of the auctions being communicated, where the investors can subscribe to the offerings at the yields determined at the auction, but up till the day prior to settlement of the SLDB issuances. But we have extended the facility for direct issuances by domestic foreign investors, foreign currency earners, in line with rates determined at the immediate preceding primary issuances, and also accommodation of investments of funds borrowed offshore by Sri Lanka development bond investors, particularly the private sector entities who has access to foreign resources. They can bring in an investments through direct issuances arrangement in Sri Lanka development bonds through. And the secondary market for Sri Lanka development bond SLDBs also acted through arrangement called designated agents. And then you see the recent developments. This is very interesting. And here you probably see the numbers, the aggregates, the people who discuss about Sri Lanka's debt profile. So you see the outstanding debt profile in terms of outstanding debt stock in the country, which is about 15.1 trillion as at end 2020. And you probably see the transition in terms of the aggregates within the debt stock. You see the domestic debt component has actually taken a significant uptick in 2020 from the previous years. Whereas you probably see the details in terms of the foreign debt stock, which is gradually coming down in terms of the overall aggregate numbers. And we see about 40% of GDP in foreign debt, whereas the balance in domestic debt, in line with the overall direction and the policy priority to reduce the government's external debt obligations to 1/3 of overall outstanding levels going forward. So this is a proposed an action that the government has taken with gradually reducing the foreign debt stock in Sri Lanka. And we have seen already this has yielded results in terms of bringing down overall foreign debt stock as a percentage of GDP. And within the domestic debt, what you are basically seeing is the domestic debt is mainly comprised of treasury bonds, which account for about 63% of outstanding as at end 2020, which is marketable and highly liquid and highly sought after by the investors, both domestic and foreign investors. And then you move on to the ownership structure within the central government debt stock. You see both banks and non-bank sectors increase their ownership in recent years. Of course, the bank increase in ownership structure in 2020 is partly attributed to the prevailed circumstances and also to some extent the accommodative arrangements in terms of the monetary policies prevailed in 2020 onwards. And what you are basically seeing is within the banks, the commercial banks own majority of the debt, whereas the non-bank sector, it is mainly by the provident funds and pension funds in the country. And they own these stocks and they basically buy and do trades, but we'll get into that in a little while with greater details. But what I'm trying to emphasize here is the facilitation for more diversification. Diversifying opportunities within the ownership prevails. The individual investors, foreign investors who would access these markets have plenty of opportunities in terms of looking at these investments going forward. Similarly, if you look at the diversified foreign debt in terms of both sources and currency, you see the debt is mainly comprised of official credit of bilateral, multilateral, and also you see a commercial component also. And in terms of currencies, you see it's mainly comprised of US dollars. But we are basically highlighting here that the opportunities in terms of investment in instruments like SLDBs, or for that matter, even in rupee-denominated treasury bills and treasury bonds, would facilitate the investors to take position within the existing foreign debts of the country in terms of their investments, either in rupee denominated or foreign currency denominated SLDBs, and through which they can become a part of Sri Lanka's development drive. And similarly, you see the yield rates and issuance volumes, how it behaved in recent years. You see that the yield rates and issuance volumes of bills and bonds have increased in line with the importance that domestic local debt markets in terms of the efforts built in terms of the policies as well as the circumstances in 2020 and there onwards all across frontier and developing economies. We have raised substantive volumes from domestic debt markets, and also we have raised these funds at historically low weighted average yield rates. And also to highlight another very important element, through issuance of closer to 3 trillion rupees of treasury bills and treasury bonds in 2020, we also manage in terms of saving about 283 billion into the cost of financing. How this 283 billion come into the picture is by looking and factoring the duration of these issuances and also by looking at the average cost of issuances in 2019. So you see that the market is behaving in a well-established and very much anchored fashion over the yields as well as volumes if you look at from this particular chart. And similarly, you see the issuance ATMs, average time to maturity of treasury bonds and treasury bills, which also behave in line with overall market preferences, market developments. And in recent months, what we are basically seeing is the preference have shifted in favor of short to medium term treasury bonds. Of course, we also opted for such given the developments with respect to the pandemic and other related developments in the market. But what we are basically seeing is with the announcement of longer dated issuance calendar, we will be able to lengthen the maturity structure going forward. And this would bring back the desired drive in line with our overall debt strategy to extend the maturities of some of our domestic debt instruments in line with cost and risk objectives of debt management. And you are also seeing here the auction performance in the primary market, both bills and bonds. What we are basically seeing is the auction performance substantively improved over the years. And also we have brought in an element in the form of a new treasury bond issuance system, which has improved the effectiveness and transparency of financing initiatives in the country. What we are basically doing is it's a phase, first phase, second phase, and of course there's a third phase also in terms of issuance structure in the treasury bond issuances, where the market access and the market participants being facilitated through a phase 2, and the similar arrangement is now focused in terms of looking at introducing into the treasury bill issuances also in the near future. And I'm just bringing in another element into the equation, that is the SLDB maturity profile. So you see the SLDBs also being offered. This provide benchmarking and a diversifying source of funds for the investors as well as the issuers. And you see the pricing structures of Sri Lanka development bonds that can be brought into the equation by looking at the benchmark established by SLDBs. And also this has maturity possibilities of extending going forward. And we have offered this for both floating as well as fixed rate arrangements in Sri Lanka. And I'm also highlighting here the secondary market yield rates of Government of Sri Lanka's international sovereign bonds. Of course, we have seen Sri Lanka's international sovereign bond yield rates decline, improved since early part of this year. But what we are basically seeing is the yields remain volatile in 2020, and even although it has improved in recent months, still it's not in line with our expectation to access the international capital market in the near future. And we will closely monitor the market developments. But what this emphasizes is the opportunity for the investors who have accessed Sri Lankan papers. Now they can think of not only the ISBs, but also they could think of rupee denominated as well as foreign currency denominated papers that's available for them to investment in the domestic market. And then of course, certain measures that we have brought in terms of enhancement of investor confidence in the market, where we have, as a measure of further improvement of safe and secure environment for government securities investments, we have brought in real-time alerts. This prompt the investors who has investments in the central depository maintained at the central bank in terms of any movements of their securities from their accounts. And these real-time prompts come in the form of SMS or emails, or they can opt for both in terms of their choice. And these alerts are in place in addition to other facilities that's available in the form of printed and electronic statements that the investors could have it on a periodic basis, and also direct online access facility that's extended to the investors. And similarly, secondary market activities. And of course, we see the market circumstances in 2020, which has brought the overall market activity to reduce in comparison to the previous years that you probably see in these charts. But interestingly, what I wanted to highlight here is the market making possibilities in terms of active market making possibilities, the space in terms of more secondary market activities prevail. Of course, we have seen market preference shifted somewhat in terms of shorter tenor, if not short to medium term treasury bonds in recent years. But what we are basically seeing is the opportunities for not a passive approach of investments, but more or less an active approach of investment in terms of looking at the activities in the secondary market. This would be further facilitated by looking at this chart, where you probably see within the medium to longer tenor, we have seen some increase in activities, treasury bonds, 3 to 5 year bracket. That's the medium term horizon I have listed here. Beyond longer term, the space in terms of activities is very much available. In terms of price movements, the price benefits that they could have in accessing the capital market. So it's a message and an invitation for you to kind of see investment opportunities in medium to longer term treasury bonds without kind of a buying and holding from a passive perspective. And also looking at a debt strategy, what we are basically seeing here is Sri Lanka is focusing in terms of reducing its exposure in terms of debts maturing within a 1 year period, and also reducing its exposure into foreign currencies. Of course, we have very much successful in terms of reducing our exposure into foreign currencies over the last 2 years or so. Of course, there's some uptick in terms of debts maturing within 1 year, in terms of higher issuances of treasury bills, as well as to some extent the market preference shifting in favor of some of the shorter tenor instruments. And at the same time, we're also looking at lengthening foreign currency debts maturities. We were successful in terms of sourcing new debt contracts in terms of a longer tenor horizons. And similarly, what we are basically seeing is a very significant approach in terms of capital market development in this country. The government and the central bank has initiated new technology and legal framework in terms of introducing electronic trading platform, that is ETP, and similarly a surveillance structure, and also looking at a central clearing house, CCP arrangement. So these are the new technology and legal framework that we are working with. Similarly, we're also looking at upgrading existing technology and also empowering the legal framework in terms of central depository, that is Lanka Secure, and also Lanka Settle, CBS Cells RTGS structure. So they wanted to bring in elements of net settlement structure, and also looking at opportunities to see whether we could bring in, apart from rupee denominated settlements, into the settlement structure with foreign currency opportunities. And through an electronic trading platform, we wanted to create a virtual marketplace. We have a limited screen-based trading arrangements in practice at the moment. We wanted to bring in a fully fledged electronic trading platform going forward. And through a central counterparty arrangement, we would bring in kind of a settlement assurance into the market, and also would bring in much more facility in terms of minimizing liquidity requirements in the market participants. So these are in the pipeline, and the market is working with a very much agreed target operating model to see that these things are in place by 2022, in latter part of 2022. And similarly, I was just highlighting mainly in terms of government debt securities market. In terms of corporate debt market, the concentration is mainly among CDs as well as corporate bonds. These are debentures of medium-term maturity. And also these are secured and unsecured basis. But what we are basically seeing is through government securities benchmark and pricing, these could be also extended going forward. In concluding, what I have to say here is, in debt securities market in Sri Lanka, the opportunities are plenty. Liquidity is reasonably high. And also, we have a well-established infrastructure and institutional arrangement. And also, we are working through a further advancement of best standards of international practices in debt issuances. And this would facilitate both issuers like central bank and the government, also the corporate sector, as well as investors like you all, to kind of to raise funds as well as invest funds competitively in Sri Lanka and become a part of Sri Lanka's development drive. Thank you very much.